Welcome, latest Motley Fool scoreboard. I'm on Chocolate. We've got longtime fools Toby Bordelon and Jason Hall giving a 1 to 10 rating to a top 50 stock in the primary hidden gems database. It's Fortnet, ticker symbol FTNT. Rate the strength of Fortinet's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you are at 8s, Toby.
Yeah, I like Fortinet. A broad customer base across multiple industries. Big patent portfolio here too, diverse set of products. It's an entrenched cybersecurity company that offers critical services to its customers, but it's still very strong in both revenue and billings for the growth there. The industry is very competitive though. There are switching costs, right? That's true, but a major screw up would probably send some customers elsewhere. And constant evolution is required. To stay at a minimum, you got to stay competitive with your peers.
Yeah, this is one of the leaders in networking and security and across hardware and software and services. Toby talked about switching costs. This is a very sticky business. It's probably getting stickier in the age of AI. Founder-led, incredible track record of profitability, been GAAP profitable every year since going public, while also still spending the necessary money on R&D. One of the founders is the chief technology officer, the other is CEO. They also continue to make small bolt-on acquisitions. Those are things that will bolster its technology and help it build on its lead over its competition.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. Jason started showing his hand already. He gave it management a 9. Toby, you're at an 8.
Yeah, I like this management team. We have 2 co-founders still with the business. One is CEO, one is chief technology officer. That's great. And it's not just them, right? Chief Operating Officer John Whittle, been with the company for 18 years, as has the Chief Information Security Officer Carl Windsor, right? So broad experience among this team, very experienced, long-tenured management team with a great track record. You love to see this.
Yeah, the great track record I think is important because there are plenty of long-tenured management teams that have generated mediocre results for their shareholders. And we talk a lot about founder-led companies, and there's definitely a correlation between founder-led companies and outperformance, but it's not always a guarantee and it's not always causation. But I think with Ken and Michael Shih, we have an example of the right combination of like mission-driven founders with a business that's a little bit disruptive. And also it turns out, guess what? They're really, really exceptional operators. A metric that I like to look at, free cash flow, margins and stuff are really good right now, and there's some cyclical benefits to that, but it really started ramping up in 2018. So as much as AI is awesome, what they have done, focusing on the strategic focus of the business to improve margins, long dates current trends. So the other thing that they've been smart about is when the company started shifting from really like kind of hitting a critical mass with their free cash flows, they immediately started buying back shares. And since that point, which was about 2018, share count's fallen 18%. Funny thing also has happened. The business has continued to grow more profitable. And even after buying back 18% of the shares over the past 7 years, cash on the balance sheet also continues to grow too.
Got to like all of that. For financials, a 10 is a fortress. A 1 is yikes. Jason's at an 8. Toby, you're at a 9.
Yeah, I love this financial situation here. About $500 million in debt is all I've got against $2.2 billion in cash and $1 billion in short-term investments. Another $300 million or so in long-term investments. That is a ton of liquidity. They can pretty much do whatever they want when opportunities present themselves. And I don't see that changing anytime soon. $1 billion in free cash flow for the first quarter. Really, really great. Strong revenue and bookings growth as well. It's hard to imagine a financial situation being much better than this, quite frankly.
Yeah, I agree with that. But also, I don't want to give the company, like I said before, too much credit for just being in the right place with the right business at the right time in networking and security in the age of AI. But so yeah, we're getting some margin increase just because of higher demand and also the increase in the software mix. Management deserves credit for shifting the business from less of a hardware focus and more of a software focus, even though maybe that might be going the other way because of technology challenges. But the key to me when it comes to like the financial picture, management has been extremely diligent about executing on its plan to strengthen the business. And that's, as much as the cycle is good, that's really resulted in better unit economics, better margins, and better cash flows. Like what Toby talked about. $1 billion in free cash flow in the first quarter. It's the most ever in a quarter. They're probably going to end 2026 with a ton more cash on the books than they did when they start. I kind of hope that's the case. I don't want them to be too aggressive about buying back stock with the price as elevated as it is right now, but we'll talk about that next.
Yeah, super strong fundamentals. Let's talk about that valuation, Jason. How well will Fortinet stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, my expectations, 10 to 15% in annualized returns, probably on the lower end of that. And my safety score is a 6. Again, this is a business that I love. I am holding on to my shares very tightly. Here's a funny little thing about it. Even though I'm talking about the multiple being a little stretched at 12 times revenue on a price to sales basis, it's a rare example of a tech stock that its price to sales multiple is cheaper today than it was in 2021 when the market was a little bit crazy, but the stock price is still much, much higher. My concern is this is a pretty mature business and it is growing quickly, but because of that super cycle in demand, the risk over the next 5 years is the cycle turning plus disruption. And those are not 0% risk things. So there's some risk of underperformance. I don't think there's a big risk of losses, but I do think that there is a risk of underperformance. But like I said, I'm sure not selling my shares anytime soon.
Yeah, similar for me. I'm going with 10 to 15%. I think it's probably a market beater from here. I'm not expecting anything crazy, though. On safety, a 6 as well. The valuation looks a bit rich to me, but given the performance in their financials, it's certainly not insane. Still, there is a small risk of a big drop temporarily if you get a big disappointing quarter, because that's just the way these companies tend to go.
Thanks to both Toby and to Jason. They've given Fortinet a very strong overall score of 7.7 out of 10. Makes sense. As you know, we love founder-led businesses at the Motley Fool, especially when those founders are a pair of brothers. For top-its, Toby prefers CrowdStrike. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Train Technologies. Till then, Fool on.
Nailed it.
Finally. Give me enough safety nets and I can walk that tightrope.